Help us understand what is going on exactly.
You know, bull market, enjoy it while it lasts. Never does. We're a bull market. Trump last night came out and talked about crypto assets being eligible for 401ks. I mean, that's a monster pool of capital. And what we're just seeing is through these treasury companies, through all kinds of different avenues, the aperture of being able to buy crypto being widened and widened and widened. More avenues bringing people into the tent.
In this video, Galaxy CEO Mike Novogratz will talk about Bitcoin soaring with rising debt to GDP. Let's catch him up to know more.
I think one of the things that I actually didn't even comprehend is these treasury companies have done so well. The public equity markets are so much bigger than what the crypto markets were. And so as we're really broadening our reach through public equities into our asset class, you're just seeing tons of money pour in.
When you understand what the president was talking about with 401ks, how do you think that's going to happen in practice? Are people going to be able to buy Bitcoin directly? Are they going to just be buying Bitcoin ETFs? Are people going to be able to buy levered versions of all of this? I mean, that's when it gets more interesting. Or not more interesting, but that's when
the devil's in the details. But you're going to see funds. I mean, the simplest thing is a Bitcoin fund, an ETF. But I think the devil will be in the details. There were already some people that were out there before this was happening, finding ways to do that. But again, it's when it becomes commonplace, when you can do it at your old, the place you've already been doing business with, if it's Fidelity or T. Rowe Price or whoever it is, you just pull more people into this ecosystem. So I'm in the lane that Bitcoin is digital gold, and it's a hedge against incessant money printing, right? It's a hedge against incessant bad fiscal policy in not just the U.S., but in the whole world. And so I don't think Bitcoin will be used as a currency. I think stablecoins will be. And I think you're going to continue to see Bitcoin appreciate as long as we have governments that can't spend less than they take in revenue. And we're not even close to that, right? This big, beautiful bill is a beautiful bill for lots of people, including if you have a data center and you get a, amortized, appreciate all your CapEx in year one, right? There are lots of great business things, right? I think our economy is growing faster, but it doesn't do anything for our long-term debt. And as long as that debt to GDP keeps climbing, you're going to see Bitcoin prices keep climbing.
Earning crypto passively without trading is becoming increasingly accessible, thanks to the rise of crypto index funds and exchange-traded funds, ETFs. These investment vehicles allow you to benefit from the broader digital asset market without constantly buying, selling, or rebalancing individual coins. Instead, they provide diversified exposure to multiple cryptocurrencies in one package, making them an appealing option for long-term investors who prefer a hands-off approach. A crypto index fund pools investor capital to buy and hold a curated basket of digital assets, often the top 10 or 20 by market capitalization, and periodically rebalances to reflect market changes. Some are managed centrally by investment firms, while others are decentralized and operate through on-chain smart contracts, offering added opportunities for staking or DeFi yields. Crypto ETFs, on the other hand, trade on traditional stock exchanges, giving investors the ability to gain crypto exposure through their regular brokerage accounts. Some track a single asset like Bitcoin, while others combine multiple coins or incorporate yield strategies such as covered calls to generate regular income. The passive income potential comes from multiple sources, including appreciation of the underlying assets, staking rewards for proof-of-stake tokens, and in some cases, monthly income distributions. While market volatility, management fees, and smart contract vulnerabilities exist, the built-in diversification and automation make these tools a compelling way to grow wealth in the crypto space without the stress of active trading.
What about Ethereum? Because that's been on a run as well.
Yeah, listen, Ethereum has a story that's a little different than Bitcoin, which has always been we're going to be the base layer of trust where lots of projects get built on top of. And it's going to be so used by so many different industries and people that it becomes a currency itself, right? And that story's picking up momentum, especially with stable coins, right? A lot of the stable coins will be running on Ethereum rails, and it's a trusted blockchain. And so that, but don't discount the fact that, you know, Joe Lubin and Tom Lee have set up these Ethereum balance sheet companies, treasury companies that have given public market investors real access to not just Ethereum, but staking yield, you know, potentially lending derivatives on it. And so that's pulling in money, and, you know, prices are set on the margin. When you have a couple $100 million a day of new money just buying, it draws people in, and you're seeing that happen. Yeah, listen, stable coins are going to be a big deal. It's going to take a while for stable coins as payment coins, as stable coins for AI, you know, AI to AI rails to integrate into our financial system, right? And so right now, stablecoins are mostly used for liquidity in the crypto markets, right? They're the oil that allows trading in the crypto markets, and for overseas payments. And in that case, Circle and Tether, the two dominant coins, are probably going to keep their dominance. But over time, JP Morgan is going to have a coin, PayPal is going to have a coin, everyone's going to have a coin, and you're going to see other applications, and then you're going to see, I think, who actually wins this game long term.
Okay.
So yes, I mean, it's an easy, intuitive, I need to play stable coins, and there's one stock that does it. But remember, Coinbase owns roughly 50% of Circle in terms of the revenue flow, right, on the USDC at least. And not to, you know, mention, we just launched the European version, which I think in time will pick up.
Bitcoin may be trading far below its true worth, according to the energy value metric developed by Capriole Investments. Charles Edwards, the firm's founder, estimates that Bitcoin's fair value currently sits around $167,800 per coin, roughly 45% higher than its present price of $116,000. This suggests BTC is undervalued by one of the widest margins in years, with the market offering what he calls a 31% discount. The energy value model, introduced in 2019, calculates Bitcoin's fair price using three key factors: the amount of energy miners expend, the rate at which supply grows, and a constant representing the fiat dollar value of that energy. If miners were to halt operations entirely, the metric would imply a value of 0. But record-breaking network activity proves otherwise. Data from Glassnode shows Bitcoin's hash rate hitting an all-time high of 1.031 zettahashes per second on August 4th, highlighting the massive computational power securing the network. Edwards notes that the current gap between price and energy value is even greater than in September 2020, when Bitcoin was still under $10,000. Strong network fundamentals, reflected in both the energy value and complementary measures like hash ribbons, point to sustained miner confidence and long-term bullish potential. If history is any guide, market prices may eventually revert upward toward this energy-based benchmark. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video.